All right, let's talk about what on earth just happened in the crypto market. In just the last few days, we saw one of the sharpest, most brutal sell-offs in months. But was it really about a scary headline, or was there something much, much deeper going on? Let's jump right into the numbers.
And it was just a sea of red, starting with the big one, Bitcoin, suddenly plunging 12%. Then, of course, Ethereum followed, and it dropped even harder, down 16%.
But the real pain, wow, the real pain started hitting the altcoins. Look at Zcash, down a staggering 36%.
And then you have Litecoin? I mean, a 60% wipeout? That's just jaw-dropping.
And yeah, XRP got hammered too, with a massive 53% drop. So let's be clear, this wasn't just a little dip, this was a full-on market bloodbath.
Seeing numbers like that flashing across your screen, it's intense. And it makes you ask the immediate question, what in the world just caused this massive cascade?
You know, on the surface, the answer seemed pretty obvious. The crash really kicked off right after this news broke about potential 100% tariffs on Chinese goods. And a headline like that, yeah, it's enough to spook any market. But here's the thing, that wasn't the real story, not even close.
Okay, let's really get into this, because this is where it gets fascinating. You have to separate the spark from the fire. That trade war news, that was just the spark. The fire itself had been building up for a long, long time.
And this slide just nails it, right? The news was the match. The real fuel for this inferno was something way more dangerous, excessive market leverage. Simply put, people were borrowing huge amounts of money to make even bigger bets. The entire system was basically a giant house of cards, just waiting for a slight breeze to knock it all down.
So yeah, let's focus on that fire, the leverage. For weeks, this wave of crazy optimism had traders borrowing heavily, making massive bets, and creating this really precarious situation. The market was completely overheated, and one of the biggest red flags was a little something called open interest.
And you know what's wild? People were screaming about this for weeks before the crash. You had analysts tweeting out that open interest, which is really just a fancy way of saying the total amount of borrowed money at stake, was at a dangerously high level. The exact same level, by the way, that we saw right before a previous 30% drop. The writing was literally on the wall. The system was primed for a fall.
So how did that play out? Well, when that house of cards finally came down, it wasn't just a sell-off. It was a violent, systemic deleveraging event, a complete reset. Some people are even comparing it to the massive liquidations we saw back during the COVID crash.
And the numbers here are absolutely mind-blowing. In this one event, we're talking about over $28 billion in altcoin bets just gone, wiped out, and another $10 billion in Bitcoin open interest just vanished. This wasn't traders deciding to take profits, this was the system itself forcibly closing their positions.
So here's the crucial thing to understand. This crash, as painful as it was, actually served a mechanical purpose. It was a massive flush. All of that excessive, dangerous leverage that was making the market so incredibly fragile was forcibly ripped out of the system.
Which, of course, leads to the next big question. So, now what? Well, you know how after a huge forest fire, the ground is cleared for new, healthy growth? It's kind of like that. A market reset, as brutal as it is, can actually pave the way for a much more stable and healthy foundation going forward.
And a market usually heals in a few steps. First, you get that violent liquidation we just saw. That's kind of like the fever breaking. Then, things start to stabilize. The traders who made it through start to rebalance, and liquidity slowly trickles back in. And the end result? You get a market that's actually healthier, one that's driven more by real conviction and less by reckless gambling.
And that's really the key takeaway here. If you survived this reset, the good news is that the market is now standing on much firmer ground. A huge amount of that systemic risk has been significantly reduced, creating a much more sustainable environment for whatever comes next. You know, an event like this is a harsh but really valuable lesson. It's a reminder of the #1 rule in any volatile market. Protecting your capital is always more important than chasing profits. The people who manage their risk properly are the ones still standing today. So I'll just leave you with this thought. We so often measure success by our gains, right? By how much we're up. But after a systemic flush that wipes out billions in a matter of hours, maybe the real victory isn't about how much you made. Maybe it's just about the fact that you're still here to trade another day.